What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 2nd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why the Bitcoin ETF that so many people are amped up about, that BlackRock has filed for, may not be the big catalyst that people think it is. I want to spend some time to talk about a recent development that led Bitcoin's price going up about just 1.59% for the day, total basically from bottom to top here between the last 24-48 hours of around 4.5 to 5%. And this again signals here that we may not have the total demand that we really need in the market to drive a new bull run. I want to spend some time to talk about what I'm discussing here as we go through the video. If you happen to enjoy my rambling, consider dropping a like, consider subscribing if you guys haven't already, and join the DataDash family, and let's go ahead and kick off the rambling. All right, I want to go ahead and start here by talking about this kind of recent move we saw in Bitcoin. Now, from a TA perspective here, nothing's changed. We haven't opened up any short positions. We have not gotten the weekly flip to the red side yet. So we are, again, sitting in cash here for the moment, for those of you who are wondering what we're doing. But in regards to the price action here we saw over the past couple of hours, especially really here over the last 24 hours, we came up here from around a relative low of $28,643 towards around $30,000, facing resistance and coming down back another $500. So what really caused both of these moves? Well, there's two things we're going to talk about here. The first one here has to do with an announcement around MicroStrategy and further allocation to Bitcoin. We'll talk about that as we go through the video. And then outside of that as well, there was some developments around Finch, which is essentially a credit rating agency in regards to the credit rating of the United States. So we're going to talk about these things here and how they play in tandem with Bitcoin. So let's go ahead and start here with this news around MicroStrategy. Now, was the market all amped up by MicroStrategy's tweet the other day that they bought an additional 467 Bitcoin for $14.4 million, making their total balance 152,800 BTC? No, that was not the news that everyone was amped up about. Now, of course, MicroStrategy is again collecting quarters under the mattress comparative to their prior purchases in order to buy more Bitcoin. They're doing it at every opportunity. It seems like, again, they're kind of following that mantra of, hey, if they have capital, average into Bitcoin. And look, at the end of the day, I'm not here to really bash MicroStrategy for that. That is their key goal here. Michael Saylor and the team have decided to essentially turn MicroStrategy into a pseudo Bitcoin ETF. That's the topic I want to talk about here as we go throughout this video and kind of lean into this discussion point around the Bitcoin ETF. Now, essentially speaking, this was not the news that people got excited about. The news that everyone got excited about is that MicroStrategy is planning to raise $750 million in common stock offering to buy more Bitcoin. Now, they say that this is to purchase more Bitcoin and conduct corporate operations, whatever. Essentially speaking, they said the quiet part out loud. The idea here is to dilute the common shares and basically issue new shares in order to go out and from that raised capital that they're issuing to investors, right? They're issuing those new shares, they're getting capital in return, they're going to go out and buy more Bitcoin. Now, MicroStrategy is in a pretty unique position here because by diluting shares, they're not really diluting the core purpose of this. Essentially, MicroStrategy effectively runs in many ways like a Bitcoin ETF, because if they dilute the common share here, if they're able to get $750 million of capital from investors, this essentially means that, yes, they are diluting the shares temporarily, but then they're going to go out and buy more Bitcoin. So essentially, you're still owning the equivalent amount of Bitcoin here that you originally owned, owning the shares of MicroStrategy. Right? So again, it's not really a dilutive process in this case for investors. Generally speaking, this is a pretty unique feature here of MicroStrategy as a company in the way that they are going about kind of acting like this kind of pseudo Bitcoin ETF. Now, I want to spend some time here to talk about this headline. Right? MicroStrategy here, right, has accelerated due to Bitcoin's price going up over time. And it has started to find more of a equilibrium here. If we divide MicroStrategy by Bitcoin, it has found a better equilibrium with Bitcoin's price. Sometimes there are periods where it will outweigh the performance of Bitcoin. Sometimes it underperforms against Bitcoin during capitulative periods. And there's a reason for this here, because essentially with MicroStrategy, one of the big things that MicroStrategy did in order to buy so much Bitcoin is that they monetized their revenues. As their traditional IT and logistics business essentially was kind of their bread and butter over the past 2 decades, since back during the dot-com bubble, they decided to essentially monetize those revenues off in exchange for short-term credit or long-term debt in order to go out and buy more Bitcoin. That's how they built the huge multi-billion-dollar position they have. Now here's the catcher. Here's the important thing we need to understand here. MicroStrategy can be liquidated. Now MicroStrategy has constantly said that their liquidation price is $3,000 or some really low figure. And look, at the end of the day, I'm going to go ahead and probably say as a publicly traded company and make such big statements like that, they're probably being pretty honest there. However, I would say that while that may be their average liquidation price, however, that may be where some of their bigger positions are with these additional purchases. Again, we need to understand at the end of the day the fundamentals here of a company like MicroStrategy, and that is that liabilities or debts can only go so far from assets before you start to have problems. Especially if you're using borrowed capital to buy financial assets, right? And generally speaking, for the last 3 quarters, except for this one now, right, the new Q1 results that came in, right, while assets are now above liabilities, we essentially had 3 quarters here where essentially liabilities were expanding against assets. And that can go on for some time, but I gotta tell you guys, it can only go on for so long, and it can only get to such an extent before companies have to cover. MicroStrategy is not gonna risk bankruptcy over its commitment to Bitcoin. And that will be a very painful blow if Bitcoin comes back down again. If they keep averaging it at these higher prices and keep betting that it's just smooth sailing from here on out, it's guaranteed. That is going to be a potential risk factor here for MicroStrategy, not just for MicroStrategy, but for the crypto space. And this is something I want to kind of bring your attention towards here, guys. My last point here around MicroStrategy before we dive into the next topic, which is that, yeah, I know it's great to see like MicroStrategy is this kind of pseudo Bitcoin ETF, or at a minimum that MicroStrategy is heavily bullish on Bitcoin themselves. But on this topic of like the institutional demand out there, the topic comes back towards, we come back to this topic of corporate treasurers, right? MicroStrategy was kind of the original OG in this respect. And last bull market in 2020, 2021, we had Tesla come out, we had Square come in with like a multi-$10 million, maybe a couple $100 million position. Tesla came out with like $1 billion plus purchase of Bitcoin. This was this really kind of short tidal wave that maybe signaled, hey, maybe this is going to be something that all companies do. It's been 3 years now, 2 to 3 years since that wave of adoption of companies buying Bitcoin. The framework easily presented by MicroStrategy, how other companies could do it. There is MicroStrategy as a pseudo ETF now, if you want to get that exposure. Whether you're talking about individual investors, hedge funds, publicly traded pension funds, and even corporate treasurers, they have a way to do it. They have a way to get in the market. They can either buy through a whole range of institutional channels to buy Bitcoin through exchanges. They can buy MicroStrategy here, a pseudo exposure here to Bitcoin. They can buy GBTC in many cases. Why are none of them adding it to their balance sheet? Can we name one company that has made a $50, $100 million purchase of Bitcoin with, mind you, a lot more capital and revenue streams that they can monetize, just like MicroStrategy, that are multi-billion dollar companies in their own right? This is the question I keep coming back to. Like, where is this demand that people are saying there is? These publicly traded companies have to state if they're buying Bitcoin, essentially. They have to make quarterly reports. So we would have seen it by now, to some degree, that there'd be some exposure to digital assets. I can't name a single one, guys. And it feels like a bit sad to say that because we were really excited about that narrative. I'll say it more than anyone. We were excited back then that, like, yeah, if you think about corporate liquidity, there's a ton of cash on the books for a lot of companies. They're looking to constantly hedge against inflation, but not many of them are going out and buying Bitcoin or Ethereum or other digital assets, especially not altcoins. So this is a key point here. And I want to spend some time here again to emphasize to you guys, we just dropped our new newsletter here for the month here in August. And we wrote about, what really it takes to kick off new bull markets. The key thing we need to see in order to really sustain long-term uptrends, not only in Bitcoin and altcoins, but also in stocks. If you guys are interested in checking out the dashboard, if you guys haven't signed up for it yet, I highly recommend you guys check it out down below in the description. You can get 20% off if you sign on an annualized basis. And it's not just the newsletter you're getting a whole range of different things. You guys get access to our 20-page plus report each month, our 3 to 6 monthly trade setups that we're watching between equities and crypto, our exclusive market update videos diving into our thoughts on the market, as well as our actions. We send those out on our Telegram and our alerts group, our mid-month webinar with a Q&A segment for subscribers, access to the dashboard discussion group where you can talk to hundreds of other members, quality members in the dashboard community, and outside of that as well. If we have any events, you guys will get discount tickets to conferences that we speak at. So that's generally what you guys can get in there and the offering. We're definitely excited to have more people join the family, and it's definitely a great way you guys can support the channel. But even if you can't, definitely consider liking the video. That's a great way you guys can support us. I want to go ahead though and continue on with the conversation here and talk a little bit about the thing that essentially led valuation surprisingly down here for Bitcoin, or at least many people see as the kind of catalyst here in the past couple of hours. Now, it could just be that some of this news is just fading here off of, really the fact that this common raise that a lot of the market has been pricing in has not closed yet, and may ironically be a negative thing if they can't close that $750 million raise, showing and revealing that there's not the kind of demand that many people are pricing in. But I think there was another potential weight here, which is essentially the news that came out and they discussed on CoinDesk and a couple other sources, which is that Bitcoin had reverted back to 29.6K as the dollar index treasury yields kind of shrugged off the recent US rating downgrade. Now, I'll go ahead and say here that essentially speaking, there's something quite telling here, which is that this news, this downgrading by Fitch, essentially should be really bad news for treasuries. It should be bad news for the dollar, and it should be really good news for Bitcoin, especially if we're thinking of de-dollarization and Bitcoin becoming this alternative asset. We should be seeing Bitcoin from a fundamentals perspective doing well during this news release. This should be one of those kind of catalysts that drives up Bitcoin. But unfortunately, like back in the past, in August of 2011, when there was a similar downgrade by the S&P, another credit rating agency, right? Essentially, which created Bitcoin at the time, being a risk asset, Bitcoin is trading the same way it did during that period of time. Maybe not so dramatically by that means, but essentially it's not responding positively to this news. This should have been kind of like a follow-through news piece that carried us back up towards this range, I would say easily. Probably some of the more bullish news here, because if Bitcoin really is that risk-off kind of asymmetric asset that's separate from global assets and really just does well during these kind of fearful periods and distrust and the dollar and the US government, right? And people are looking for a new world reserve asset or currency. Well, Bitcoin's right here. It should be doing really well during this period of time. And this is again, guys, I want people to understand here that, when we're talking about these things here, I understand it comes from a bit of like a negative tone, but know that it comes from a place where I start out when I'm analyzing things, I try not to have a bias on this stuff. I want to think more than anything in the optimistic camp. I want to believe that crypto can continue moving higher, but I gotta be honest with you guys, Bitcoin is not showing up to the plate. It has not done so since back here in April. It has continued to face resistance in this range. And while this news from Fitch, here you can just see, I think this is just a very fitting photo here from Treasury Secretary Janet Yellen. Not a very favorable photo here, but fitting with the headline here that essentially they downgraded the US credit rating from AAA to AA plus here essentially. That this news here should be the moment that Bitcoin shines. It should be the thing that gets us excited here. But instead, Bitcoin is lagging while the dollar is still holding up here, right? Take a look at the daily chart here. It's unchanged. The dollar is regaining any faded losses from yesterday. 2-month yield here on bonds, holding exactly where it was. 3-month yield, still paying 5.4%, right up in that upper range. 2-year treasury note, at 4.8%, no serious decline. On the other hand, we take a look at our microsphere in crypto, altcoins snapping through their trend line. Yet again, they recovered those losses yesterday. Looks like we're rolling back over again. And more specifically, if we take a look at BNB, the 4th largest cryptocurrency, right behind Ethereum and XRP, BNB slowly but steadily rolling below that 200-week, not getting a bid. And when you take a look at that long-term chart, you start to realize a lot of that market cap gain came in during this window of time in early 2021, and there are not many ranges of support. It is no man's land. We don't know how low BNB could go if it doesn't get a bid here at the 200-week moving average. I'm not here to fearmonger, guys, but I gotta tell you guys, what is optimistic about the price action here, right? And it doesn't mean that this needs to be something, guys, I know it comes across as maybe being negative, and I understand maybe it's not fun to listen to all the time. But folks, we're here to make money. We're here to preserve and protect our capital. And I promise you, if you can view this not as a negative analysis on the market, but as a means to set standards for your investing, I promise if you can make it through these kind of uncertain periods of time and wait for the real signals to go long, real capitulation, a dollar cost averaging, I promise you guys, you're going to do a lot better than most people out there in the market who are leverage trading right now, who are taking excessive risk, who are borrowing right now in order to take positions like MicroStrategy did in a lot of cases, and all these companies. They're just so gun-ho on the idea that it's just guaranteed and we should take as much risk. I mean, again, I think back towards the last cycle. Michael Saylor was saying, basically go take basically go take out a loan on your home. Essentially, basically go out there and speculate, get rid of everything, go all in on Bitcoin. That was the narrative that we were told, and we can see here that it just the market doesn't have the momentum anymore. The momentum is gone, guys, and it's not coming back. I think like many people expected. When we're hitting these resistance ranges, prices are just fading. And what new narratives do we have to really be excited about? Now, I want to make something very clear, guys. I'm a general optimist here. There is a lot of really exciting technological developments going on in the world right now. There are a lot of really exciting sectors that we believe, irrespective of the fact that we believe, valuations in both stock market equities as well as crypto are going to go down over the next couple of months, maybe even set in new lows or set in a double bottom, no matter where you stand on that. Even though we do believe that things are going to move lower here in the near term, there are a ton of sectors outside of crypto that we are really optimistic on. And there are price targets in which we do get bullish on crypto, even though there may not be narratives right now that are really nice capitulative lows, historic ranges where we find support and could finally give us the kind of bottom range for a cycle to begin. And if you guys are interested to get access towards those different levels, again, check out the Dash report. We are talking about a whole range of different sectors that we're optimistic on in equities that could easily do anywhere from a 20 to 50x in valuation over the next couple of years, similar to cannabis stocks, similar to solar stocks, and so many other emerging industries within various sectors in the economy. These are the kind of moves that you prepare for. You build positions, you wait 2 or 3 years, and you make generational returns. You don't try to trade every single day. You don't try to use too much leverage. You play it safe and make sure you're collateralized well in order to win out big. That's the key goal here, guys. So if you're interested, you can check out the link down below in the description to get signed up here today. Join hundreds of other members here within the Dash Report community. But that's it for today's video, everyone. Thank you all so much for watching. I appreciate you guys making the time here today to give me some time to ramble. If you enjoyed it, consider dropping a like. It's a great way to support the channel. But until the next video, I'll see you guys on Friday. Stay safe, trade smart, and I'll see you all in the next video.